a little bit about debt elimination and wealth building programs. So Murray Beaulieu, I hope I'm pronouncing that correctly. Is that close enough?
Beaulieu. It's tough.
Beaulieu.
It's tough. Yeah. Yeah.
Thank you, sir. So why don't
No
you tell
penalty.
me,
No penalty assessed there.
no penalty, no extra interest, right?
No, no, yeah.
So tell me a little bit about yourself, and then we'll chat about this debt elimination and wealth building program.
Well, John, it's great to be here. I appreciate it. So just real quick, because I was as soon as I went to college, I decided to go ROTC, and I joined the Army and had a 5-year career in the as a Cold War veteran. So luckily there was no shots fired. Lived in West Germany before the wall came down. We were half an hour from the most likely avenue of attack by the Soviet Union. Then I went into a 35-year corporate career as a financial controller for high-tech manufacturing. Um, 3 Fortune 500 companies, Texas Instruments, Raytheon, and a company in Boston called Analog Devices, which makes semiconductors. So I'm not telling you that to brag. I'm telling you because, all my experience in finance, by the way, I had a master's degree and a finance degree, I had an MBA and a finance degree. In all that experience in managing high-tech manufacturing, I wasn't aware of how interest worked. So finance covers a lot of ground, right? So when I learned what I'm going to share today as a consumer, okay, as a homeowner, I was blown away. I immediately became a client. And then the next thought was, hey, more people need to know about this because I'm a finance guy and I didn't know how this worked. And so I know that there are other people that could benefit from this. And I'm so psyched that John asked me here because we're going to take it a step further and talk about how this can help real estate professionals do more of what they already do without doing any extra work.
Right. It is very interesting. And most people don't know about finances. And when you see some posts on social media, it probably is a class that we should all have been taught in, early on, savings and interest and building wealth rather than the classes that we are taught and which really didn't help us in the long run. So I appreciate that, Murray, and thank you for your service, first of all. And for those who have never heard the term ROTC before, if you don't mind, go
Huh.
into that a little bit.
Uh, so ROTC is Reserve Officer Training Course. So all that means is you take courses while you're in college that train you to become an officer in the Army. So you start off as an officer as opposed to enlisted, which is you go to boot camp. So it's a different kind of training. It's more managerial, but we still have to learn all the stuff that we have to train
Sure.
everybody.
And I do
You
remember
start
when
off as an officer.
I remember at Niagara University, there was a ROTC group there, either once a week or on Fridays or once a weekend, that you could see the ROTC, the cadets
Y-
basically
Yes,
in their uniform
yes,
on campus. So, well,
yeah.
thank you for your service. And I'm glad
Well,
you were
thank you.
in an area that shots were not fired. So
Shots were not fired. Yes.
good. It is interesting. Like we chatted about last week, what we don't realize is all we know as a mortgage holder is, what's my current interest rate? What's the rate today, right?
Mhm.
And that's all I'm stuck in my head is I'm at 5.5% or 8% or 3%. But realistically, you think about this, when you look at the amortization schedule, you
Mm.
know, and you're looking at 30 years of payments and you're thinking, wow, I bought a home for 200,000, let's say, and at the end of the 30 years, I probably paid 600 grand for that home. So I'm guessing the program that you're going to share with us is going to enlighten us and
Mm.
basically help us eliminate debt and maybe pay off that mortgage in 5, 7, 10 years. What is it?
So thank you for that lead in. Exactly. That's where we'll start. And while I'm explaining this, for you realtors out there, I want you to put up your antenna and see if you can connect the dots here, all right, and how you can help more of your clients and separate yourself from everybody else. So first of all, I think everyone reads just about every week that all-time personal debt is an all-time high, and next week it'll be another all-time high. It's not going down, right? Interest rates have gone up recently. More and more people are in debt, so people are struggling. So this is This is a huge opportunity to help those people. Here's the deal. And this is where I was blown away. Every type of debt has an interest rate. What I didn't know, and if you learn nothing else from this call, at least learn this. The way interest is calculated on every type of debt is completely different. So mortgages, which we talk about the most because they're usually somebody's biggest debt, mortgages have a completely different math than credit cards, which are completely different than lines of credit, which are completely different than car loans, which are completely different than student debt, blah, blah, blah. So you can't compare a 6% car loan with a 6% mortgage, for example. It's apples and oranges. It's not, we're all conditioned to think interest rates. Oh, which is important in the, overall you want to have a lower interest rate. I'm not arguing that. That's definite. That's a universal truth. However, as you said a minute ago, the interest you're paying on a mortgage, because of the way they calculate it, is a lot higher than the quoted interest rate that you think you're paying for the mortgage. And if you look at the truth in lending statement when you close, or go online to any online, there's tons of online mortgage calculators. Or if you have a mortgage now, look at the payment you're making right now and look at the portion of it that's interest and a portion of it that's principal. There's no way, if you have a 6% mortgage, that at the end of 30 years, the total amount of interest you paid was 6% of the total that you paid. It's going to be over 100%. You're going to be paying more interest than you are principal, which is outrageous. But no one, and they tried to explain that with this truth in lending statement, because that wasn't always there, right, John? That
Right.
truth in lending statement is what? How old is that?
Yeah, it's fairly recent to be in the history of mortgages for sure.
Because somebody wanted to sue because they felt that it wasn't clear that you're paying a lot more than mortgage thing. But you know what? No one really reads that. When you're at closing, you got 3 inches of paper, And by the way, even if you could read it, what are you going to do now? You're closing, right? So the point is you got to know what you're really paying. You're paying a lot more than you think. And if there was a way to eliminate some of that interest and cancel it out without paying it, wouldn't and start to build wealth with that money instead of paying a bank, wouldn't you want to know how to do that? Or at
Absolutely.
least wouldn't
Yeah,
you want to learn how that works?
yeah, and I see the point of how we as realtors, it can benefit us because as service providers to our customers, the then buyer and now seller, or maybe
Mm.
those who pay off their mortgage early, it gives them more cash flow, right, to buy another property. And why not do it over and over and over again? Yeah, it is interesting when you look. You don't want to look at an amortization schedule. Let's face it. You
That's
want to
right.
know what your monthly payment is. Buyers care about one thing: PITI, right? Principal, interest, tax, and insurance.
Mm.
But are they looking at the payment 360 months down the road? No,
Mm.
they're not. Or if they are, they
Mm.
probably don't want to because of, like you said, the
It's brutal.
hundreds of percentages of interest that they're paying over the course of that time. So
Yes.
since we've got that on the table now, how does this work? How can we help our current customers and future customers
Mm.
eliminate debt, create more generational wealth with a
Mm.
program?
So we have a program that it's a software tool, which I'm going to state that this is very important to me, and I hope this is important for everybody else here. We won an award from Ernst& Young for this program because it disrupts the industry. Ernst& Young is the biggest accounting firm in the world. And if you know anything about accountants, they won't put their name on it unless it's solid. I mean, they can't afford to. Accountants' main their business is based on integrity and accuracy and everything like that. So they won't put their name on something unless it's been checked out. So that was a big deal. So we have a software program that wipes out all your debt including your mortgage, any kind of debt, all debt combined in as little as 5 to 7 years without, here's the clincher, without changing your budget or your lifestyle. Okay. And which seems highly unlikely. But the reality is it's just using math. Okay. It's using algorithms. There's It's extremely complex program in the back end, but it's easy to use as a user on the front end. And it's using math because it comprehends all these differences in interest that all these vehicles have. You know, it understands that credit card debt is brutal in its own way, in a different way than mortgages. The stated interest rates are brutal, and they're, what are they, above 30% nowadays? And it's based on an average daily balance. That's a different math than amortization than
Mortgages.
a mortgage, right? And
Right.
that's different than a car loan, and that's different than a HELOC, right? They're all different. So you can't compare. You got to stop thinking, compare rates and terms. Um, just stop focusing just on the interest rates. So our program works like a financial GPS. It's only using money that you have that's not doing anything, that's laying around. And everybody has accounts where they have money sitting around doing nothing, right? So our program will work as long as you have more coming in than going out, is even as little as $50. We can put this program to work and figure out the exact day you're going to be debt free. And
Wow.
it's guaranteed to work. And let me just add a little bit more about the financial GPS part. It really does extremely well when you have variable income or variable expenses. Everybody has variable expenses. You
Mhm.
can't predict it. There's always unexpected stuff. So, like a GPS, what happens when you miss a turn? It recalculates, right?
Reroutes you. Yeah.
Reroutes you. So, same thing with this. This will put you on a path. There's a dashboard. It will show you when you're going to be out of debt, how much interest you're going to save, and how much time you're going to save. And then if it tells you what to do for the next 30 days. And if something happens that wasn't in there, it will recalculate and
Got
it
it.
will and so you don't have to change anything in your lifestyle. But let me add, when people use this program and they can see the immediate impact of the changes that are happening, they want to change their lifestyle because they can see immediate results. Quick story on it. This guy had a daughter. He was married and had a college age daughter. She went off to college. Um, and he said, "Hey, if I call Verizon and change my phone bill, we're not using all those minutes, so I'll use the cheaper plan." This is back when they had these kind of plans. So he saved like $50 a month on a phone bill because his daughter went on to a different plan, and that saved like a year and a half off all his debt, which equated to a lot of money. But a year and a half for that simple phone bill change. So you don't have to do that. But now you have a tool which will recalculate and show you exactly the impact if you decide to do that. So it's very powerful.
Brilliant. Murray, we chatted last time. You had a story about a mortgage, a situation. I'd love you to share that with the audience if you could.
You mean
We
how
just,
mortgage interest was calculated, that one?
yeah, sure.
So I'm not a historian, and some of these, what I'm going to say here is like 90% accurate. But when they first, when banks were lending to buy houses, at the end of World War II, there was a big housing boom. All these guys coming back from, the war, and they were selling houses, and banks analyzed home loans. This is before they had a mortgage, the mortgage payment as we know it today. And they noticed that the average length of a bank loan was 7 years. And the reason is people would either refinance or they would move or they would sell or for whatever reason. So they said, well, 7 years is the sweet spot. So they came out with the mortgage math that we now know, where if you look at your amortization schedule, you'll see there's a lot of interest at the beginning. You're paying mostly interest. So they figured, hey, we're going to make a lot of money on these people for the first 7 years because the average is 7 years and they're going to get rid of it. Very few people ever pay the full 30 years. I mean, you guys know that if you're in real estate, right? So they concocted this formula, which in my opinion is close to shady, where they're calling it a 6% loan, but it doesn't act like a 6% car loan. To me, a car loan is like the simplest kind of a loan. It makes sense the amount of interest you're paying and it's consistent every month. Amortization schedule a closed-end amortized loan, which is what a mortgage is like, what voodoo math is that? Who came up with this? Well, they came up with it because they want to squeeze the most money out of everybody for the first 7 years of the mortgage on average.
Right. Because after the
So
7 years, most likely they won't have that mortgage any longer. So the process will start over again and be collecting more on the next 7 years. Right. Yeah.
brutal, huh? Isn't that,
Yeah.
it seems criminal, but that's the way it works.
Well,
You know,
but it's created an opportunity here for you and for
mm,
me to share this information with people so that if they wanted to pay off their mortgages sooner and create
mm,
more generational wealth, they can
mm,
start, you know?
exactly.
Yeah. So Marie, what I thought I would do is since you shared with me your information, I will put it in the messages, the links below the video here that we're sharing on YouTube. But is
Okay.
there, in closing, do you want to give out a cell or email address or anything, or would you like just them refer to the information below?
There's going to be some information below. Before I do that, John, I want to just close the loop on why real estate folks are going to like this, if you don't mind. So
Sure.
I want you to think about if you're in the real estate business, what if you could say, hey, I'd like to sell you your dream home, and then I'd like to show you how to pay it off in 5 to 7 years. Think about how that would change the conversation. Think about how the immense value you're going to be adding in addition to what you're already doing, because it's a very emotional decision to buy a home. All right. Think about how that's going to separate you from everybody else that's in the real estate market. That's a pretty big difference from what everybody else is doing. And I know we spend a lot of time as real estate professionals trying to stay top of mind with clients with, flowers and wine bottles and Christmas cards and all this other stuff. And we don't really know if that's working. I applaud you for doing that. But think about this. Somebody is using this program and it takes about 15 minutes a month. And they have to take the actions that are outlined like a GPS. It tells you when to turn, but you have to move the wheel.
Right.
Okay. Um, every time they're logging on and they see that, you're saving them 200,000, we're talking big money here. This isn't peanuts. If you have a 5% mortgage or higher, which is where we've been the last year or two, we're talking hundreds of thousands of dollars.
Yep.
Okay. This is major.
Yeah.
So they're going to be on this 15 minutes a month for 5 to 7 years or more. And who are they going to be thinking of?
Yeah, and not only that, but think about this. When they share that with their friends and their friends go, "Where'd you learn about this?" You're going to say, "Hey, my realtor did." I think it's brilliant,
Yeah.
Murray. Thank
Yeah.
you. I
So
mean,
anyway,
yeah,
top of mind, there's a whole bunch of other reasons. If they're going to buy another property, who are they going to come to? If they want to refinance, who are they going to come to? Blah, 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 all this stuff.
right.
So contact information, there's a couple things we can do here, right? You guys already have a lot of referral partners. It goes without saying in your profession, you need to know a lot of people to help make the deal. So you can consider this another referral partner. All right. This is a unique system, though, that most of your referral partners don't have. So I don't want you to think you have to do a lot of work. My goal is to help you do more of what you already do without any more work.
Got
So
it.
below this video, there's going to be a couple things. Number one, there's going to be a referral link. You can sign up as a referral partner free, okay? And I will give you a commission on any referral who buys, okay? So you get two bonuses out of this. You get a referral commission, and then you also get the massive value that you're adding that's going to separate you with it. The big picture is you're going to get a lot of referrals, I think. That's the big picture. So there's a referral link. I urge you to check that out. There's a calendar link to my calendar if you want to talk about it, if you want to learn more. The opening call when we meet with a client is we run a debt analysis for them, and we're going to show your client exactly the day they're going to be debt free and how much they're going to save.
Wow.
And it's not just what they're going to save, John. We also going to show you how much you can start building your wealth, because the money you were paying in interest can now go to something that's paying you.
Right.
Think about that. I mean, rather than pay the bank profit, why wouldn't we want to invest? Why wouldn't we want to, do something that's going to help us, build a legacy here? So you
Absolutely.
can book a call with me, and those are the two big things. And if you want, I can send you some videos on how this works, because you're probably in your head like, how does this work? So we have some videos and stuff like that. So two options are sign up for a referral link, And number two, book a call with me. I'll walk you through this.
Wonderful. I will have that information in the links below here. And Murray, I think it's brilliant.
Thanks, John. Appreciate the
I'm
opportunity.
guessing it's complicated but simple. And but like you said, we need a GPS to help us stay on track no matter where we are navigating. And this is just a tool to do that with our finances.
Thank you. Yes, good summary. Yep,
Thank you,
good
thank you,
summary.
thank you for enlightening me today and my colleagues. And I'm just thrilled that we spent a few minutes today explaining how we can help our customers, you know, decrease their debt and increase their generational wealth. So thank
Awesome.
you,
Thanks for
Murray.
the opportunity. I hope we can help somebody out.
I hope we can. Look at this is step one in getting the information out there. So
Yeah.
thank you, Murray. Appreciate your
All
time
right.
today.
You're
I'm
welcome.
John Rakowski with the Legendary Home Group and eXp Realty, and that's Murray Beaulieu with his company, which is going to help you eliminate debt. Thanks again, Murray.
You're welcome.
Good
Thanks.
day,
Thanks
all.
for being here.